talk about why you want to strike out of Syria and the Middle East? Has it just become too difficult to trade in the area?
No, I mean, maybe to give your listeners and viewers a bit of context, we started the portfolio review exercise actually early 2019. And as part of that portfolio review, we had continuous assessments across all our markets to see which markets we felt fitted into the core strategy that we had. And our core strategy has been to deliver strong connectivity as well as building our digital services. And the other part of the strategy was really about an asset disposal program. We would sell our e-commerce and tower investments to provide liquidity to improve the balance sheet at the holdco level. So this has been an ongoing review, and the board has concluded this ongoing review, particularly around the regions we operate in. And the focus has been now to look at Pan-Africa, take our human and capital resources, focusing on the African continent, because resources always are limited, and also an assessment of the contribution of markets to the overall financial profile of the group. So when you look at the Middle East today, I mean, these are excellent businesses in their own right, very well run, strong market positions within their various countries. But when you translate them back at the group level, they're just about 4% of earnings when you combine all of them. And that's actually, quite small contribution to the total value. So that was much more the driver of the decision, from a capital allocation, human resource allocation, and taking the view that our strategy is best executed on the African continent, particularly with our big push out on fintech and digital services.
Do you still need to repatriate any funds then out of that Middle Eastern region, particularly Iran and that Iran cell situation, as well as you continue to divest from there, as well as you said, 49% stake there, letting go of that?
No, look, as you understand, there is the situation now where U.S. sanctions are in place in Iran. So that, has limited our ability to repatriate dividends and loans that we have in the country. So as we speak right now, we have the equivalent at current exchange rates of about 3 billion rand that is trapped in Iran that we can't repatriate given the sanctions risk. So, that receivable has been building up as the company, operates and declares a dividend. But there is no method, for us, or a method that's acceptable to us to repatriate. So we've kept those funds in. So under the current U.S. sanctions regime, it's not possible for us to be able to repatriate.
How much is that Middle Eastern operation worth? I mean, by the end of the total sale of everything, how much is that going to give you as a business?
No, look, I mean, the only of the disposals that we've spoken about, or the exit, I mean, the only market that we have made, quite significant progress and are well advanced in our discussions is actually Syria. So for Yemen, Afghanistan, Iran, there is no plan, to exit, immediately. We've said that we want an orderly exit over the medium term. Orderly because, these markets have been very good to us. The regulators, the people, our staff, we've as MTN Group, we've been very welcome, continue to be very welcome. We felt that, we needed to put a respectful timeline, and medium term in our kind of language is 3 to 5 years. So the Syria transaction is live, where we're disposing to our minority partner in MTN Syria, who are Teleinvest. So that is progressing, still to be concluded. But across the other countries, there isn't a specific plan. We felt that it was important to signal the intent, but because we want to do it orderly, we need time. So Syria is the only one that's got a specific execution plan that is in progress.
Ralph, what happens though from here with regards to the case that you still have with American authorities regarding the terrorist scenario and that situation? Of course, it's a saga that's continued for quite some time as well. CEO Rob Shuter has certainly said that it's something that they'll continue to review, but of course they don't. You as a company do not agree with that. But even in this case where you divest from the Middle East, surely it's still going to be something you're going to be part of for quite some time. Any progress with regards to that case?
You'll well remember that we filed our motions to dismiss the case, largely on the basis of jurisdiction. There has been an amended complaint that's come out, which we have studied with our legal advice, and we still think that the basis of the motion to dismiss remains, pretty much intact. So that matter we'll deal with, as we go on this journey of exiting the Middle East in an orderly manner, as I said. And part of orderly is that, we will deal with the cases such as the one that is in Afghanistan. The board will apply its mind, the company will apply its mind. The portfolio and capital allocation decision, is very conscious of that particular case, and we'll continue, to be defending ourselves on this case.
Yeah. You do make note of the African spectrum and your pan-African business sort of being the focal area, the focus point now. Is that in terms of expansion, looking into new markets, or just creating a bigger pool, so to speak, than of your current market? Is there also more investment going to things like 5G as well, as you've noted? I mean, you did launch that not so long ago. How much more are you going to sort of invest in that sort of technology?
Yes, for sure. I mean, when we talk about a pan-African strategy, it's about the current markets we're in, obviously trying to optimize those markets to deliver, connectivity and digital services to our customers in the host markets we operate in. So that's obviously, priority number one. Where opportunities present themselves for us to selectively expand, and when we do the financial and strategic case that makes sense, we will look at that. And I think, as you well know, we are assessing the Ethiopia opportunity right now. That still has some process to go before, firm decisions are made. But we think in a market like Ethiopia is very attractive, and there will be attractive markets over time. There are a couple of other markets that we continuously are looking at. And so it is not about just shrinking back, but we see opportunities to build out our business, core connectivity, digital services, and fintech across the African business.
Your difference is your business is slightly different, of course, massively different, should I say, from ShopRite, but still the essence of slight retail is still sort of playing its role here. ShopRite making note not so long ago that they're divesting out of Nigeria. You can tell even from the likes of Choppy that they need to pull back from certain markets. Yes, you're doing the same with regards to Middle East, but I want to focus primarily just for this question on Nigeria. Is it becoming a little more difficult to operate in that region and perhaps proving a little bit too much for the amount that you get out of there?
I mean, Nigeria is a critical part of the business. 1 in 4 of our subscribers is Nigerian. So 25% of our subscriber base across the whole of MTNs, more than 260 million subscribers is Nigerian. So one in 4. And then when you look at it in an earnings point of view, at least a third of our earnings are coming out of Nigeria. So Nigeria is very core to the MTN, investment case and story. And we're very committed as a company to Nigeria. We had some challenges in the past. We will resolve those. We remain excited about the growth prospects in Nigeria, particularly around fintech. Yes, the environment is challenging right now with where oil prices and is at the moment. And, the Nigerian fiscus depends quite a lot on oil revenue. So that's created a challenge on the currency, which has depreciated in our ability to upstream. But we take strategy on a medium to long-term view, and we still think that Nigeria remains exceptionally attractive. And we've built a very significant and material business in Nigeria that's pretty much 5% of GDP. If you think about the role telecommunications is in the GDP of Nigeria and what our proportion is. So we don't have any plans whatsoever, to follow others who are exiting Nigeria.
All right. Well, good to know on that front. Very quickly, Rob Shooter leaving, of course, as CEO. Have you put your hat in the ring? If it was thrown to you, would you take it?
I think that is a matter for the board. You should ask that to the board chairman, MTN Jonas, as opposed to throwing it to me. But I'm very committed, to MTN and playing my part and making a contribution, and would like to make a contribution in years to come. But I think you want a direct answer. You said that to the chairman.
All right, well, I'll take that as a yes. Thank you so much, Ralph. Really appreciate your time, though, and very good luck as well for the remainder of the year, of course. Very difficult times indeed, not just for the telecom space, but certainly globally as well. Retailers suffering, banks suffering, and MTN there divesting then out of the Middle Eastern region. So clearly you can tell that things aren't necessarily too great, and perhaps just simplifying the portfolio is all companies needed to do. The Chief Financial Officer of MTN Group there, Ralph Mupita, joining us on the line. Let's take a short break.